Good evening, all. I'm Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Monday, the 4th of November, 2024, about 6:25 p.m. Central Time. And boy, tomorrow's election day. And if you're going to trade now, you have to understand what you're doing. You are not using charts. You are playing whatever you think the reaction will be to the evening's results, which doesn't necessarily mean you will know who the president is. I have already told my friends I would make a bet if Trump appears to be losing, he will challenge. I don't know what would happen if Harris is losing, if she'll challenge or not. We don't know where that's at. I'm very concerned that at least the House or the Senate stays it's such where you don't give a sweep to anybody. It's very important to me. And with that, then we take a look. Now I'm watching the so-called pundits say, well, today was a Harris win. The stock market was down. The metal markets were down. The U.S. dollar, if we take a look at it, that was lower. Under Trump, you had the tariffs and so on, and business in America would be better. The dollar would be stronger, blah, blah, blah. Nobody knows. If you think that's the case, come on. The rally in the bonds and notes as I see them, pretty simple. You did nothing but fall since the Fed cut the rates 50 basis points in September. If you go with me to the financial update after this one, you're going to see the futures contracts. It's this. So now you're getting a bounce in front of this election. It makes all the sense that you can imagine. In energy markets, you rallied today, and you knew that when I did over the weekend, and I showed you that OPEC had made a decision not to put 180,000 barrels on the market. Their biggest problem is how do they get back market share? It's a real problem for them. In order to get it back, they may have to produce more. To produce more, prices will go lower. Maybe they drive out the lower margin producers like happened with the war that they had with Russia, if you'll remember a few years back. And that's when you saw it cost more for you to take delivery of oil than the oil was worth. You had to find a place to store it. So interesting times. You got to understand how this all works. When I look at the gold market, I'm on record with you. I'm bullish. I think the market will be higher than this at the end of the year. I think that either candidate that wins is bullish the gold market. It doesn't matter which one, they're not going to stop spending. But there is a time and place, and I don't believe going into reports of major events that can go any which way and you can't get a feel for it. Forget this election. I believe that, on big Fed days, things of that nature. So I watch myself there. You're trading futures. You're not trading ETF spiders that have a different leverage to them. Keep that in the back of your mind. You've got big leverage, and as I warned, a lot of the brokerage firms are taking margins up by 50%. Once they're comfortable, it could be a day or two, 3 days, who knows, they'll drop those margins right back. What you've done is you've pulled back on the daily bar chart. The market's got a pattern of lower highs, lower lows. So the trend, the short-term trend is down, but you always put filters on it. One of the filters is where's the market in relation to what I call the line in the sand, the 18-day average of closes. To me, when the market's over that, I have a bullish bias. When it's under it, I have an immediate bearish bias. Therefore, I have a bullish bias. I can see the market pulling back to that number and fighting a battle there for the next move that the market's going to make. When I take a look at Bollinger Bands, you were running them right here for a few times. You went sideways, rallied back, and then you developed this downtrend. And in momentum, you lost the bullish embedded reading. And when the stochastic turned down, it portrays a market that before we get through this high, the odds are that it's going to make a run to the 18-day average of closes. The gold-silver ratio should be gold, because what is happening now is gold is gaining on silver. That's told by how many ounces of silver you need to trade in to get 1 ounce of gold. And right now it's 84.39 ounces. When it was 80, it was under that number, 82, and that meant silver was getting stronger than gold. Not now. Which one of the markets is up as of the close today more for the year, gold or silver, in your opinion, very quickly? Silver is by about 3%. They're both up in the 33 to 35% area. Lower highs, lower lows. Okay, So silver's back under the 18-day average. This is the battleground. If it wants to fall further, you got a lot of support at 30.95 to 30.65. The battle should be right here. You've got China meeting, they began on the 4th, they go until the 8th, and we will find out. They'll leak information and give us ideas on what they're going to do. I'll be looking for that tonight to see if there's anything new on the news wires. I didn't see anything today. The market has been fighting in the copper the battle at the 100-day average in green. It finally got up to and over the 18-day average. And as I said to you over recently, I thought I said it yesterday, but if it rallies, the next rally is the Bollinger Band. You're getting overbought, though. Could it run? It could break out of this because, again, it's looking at one element to make a move, China. It's not looking at the U.S. election, in my opinion. It's looking at China. In the platinum, lower highs, lower lows, and as I said to my subscribers when I saw this pattern developing this morning, I said, if it continues to break, look for big support between the 100, the 200-day, and the lower Bollinger Band in an oversold market. Don't count on this having legs to the downside. And in the dollar index, you've done what I'm expecting out of gold. You had a market that lost its bullish embedded reading. It's pulled back and fighting its battle right where it should at the 18-day average of closes, void of a trend going into the election. I love when I see events like that. Now, tomorrow morning, what you're going to get is some data. We're going to get Redwood Group. They're going to update the U.S. retail sales data at 7:55. S&P Global's going to do their U.S. final, and the word is final here, October service sector PMI. You'll have to go against the prelim on that. ISM will come out with the release of U.S. service sector indices for October, and we'll get the API numbers around 3:30. But will these have a real impact? Minor. Seconds of people looking at it, and that's about it. They're going to all be about who's going to win the election, what's the voter turnout going to be, what's the Fed going to do on Thursday. I can hear it already, that's it. And the reaction to the election and everybody glued after, 8 p.m. when everything's closed around the country. That would be East Coast time. I think they close at 7, so it might be 9. And we'll see what happens. You got to go to your local areas there. I will cover all this for you. And if you're a subscriber, I cover it in my future stocks and SPDR ETFs. And in those ETFs, what I do is I review them, at least 40 charts on each one. They look like this. There's more lines than you see on these. It gives you more technical analysis. Remember, what I do for you here is limited. This is free. And free is what it's worth. It's free. It gives you an idea my attitude on markets, what I do, the big broad swipe of stochastics, moving averages, and what the bar chart's looking like. But there's more to it, and I show that each and every morning in these. Lots of trade recommendations when I want to make them. Profit objective, stops, everything. You get the combo package, which gives you the futures and the SPDR ETF. We give you a break on that, 30 days at a time for your subscription. You can easily cancel it. You can add to it. Do what you want on the website. We make it very easy. Just go to iRepstein.com research or move your cursor to the top here. Everything is explained, and that's where you sign up. I'm Ira. Hope to see you in those videos. I'll be with you tomorrow. You have a good day.